This is Wallet Brief, where we cut through the noise and focus on what matters to your money. Stock market today, searches surge as Tuesday delivers a convincing reversal. The S&P 500 reclaims 7,000 with a 0.9 gain, closing at 7,028. The Nasdaq jumps 1.2, and the Dow adds 0.6. Nvidia rebounds 2.3 after Monday's 2.1 pullback. This confirms what bulls wanted to see. 7,000 is acting as support, not resistance. Monday's dip brought buyers, not sellers. Monday tested the market's conviction after last week's historic breakout. The S&P 500 dipped to 6,998, briefly slipping below 7,000 on profit-taking and weak ISM manufacturing data. But overnight futures turned positive, and Tuesday's session brought aggressive buying. Tech led the charge with semiconductors and software recovering strongly. Investors are positioning ahead of Friday's jobs report, expecting around 180,000 jobs added with stable unemployment near 4.3. The technical message is clear. Buyers view any pullback to 7,000 as opportunity, not risk. That's exactly the behavior you want after a major breakout. This is textbook healthy market action. Major breakouts need to prove themselves by holding support on the first retest. The S&P 500 breaking 7,000 last Wednesday on Nvidia's 78 revenue growth created enormous excitement. Monday's pullback tested whether that level would hold. Tuesday answered decisively, yes. Dip buyers stepped in around 7,000, pushing the index back above. This validates the breakout as real, not false. The fundamental backdrop supports this. Nvidia proved AI infrastructure demand is massive and growing. Corporate earnings are strong. Inflation is moderating. The economy is cooling but not collapsing. That creates room for continued gains if data cooperates. If you bought the Monday dip near 7,000, Tuesday delivered quick gains. If you held through, you're back at all-time highs. The lesson is clear. 7,000 now acts as support in your portfolio valuation. Pullbacks to that level should be bought, not feared. Wednesday brings ISM services data. Services represent 70% of the economy, so this matters more than Monday's weak manufacturing number. Strong services data above 52 supports continued gains. Weak data below 50 raises recession concerns. Friday's jobs report is the week's main event. Goldilocks scenario is 180,000 to 200,000 jobs. Enough growth to sustain the economy, but not so hot it delays Fed rate cuts. Wednesday's ISM Services Index releases at 10 a.m. Eastern. Markets expect 52.5, showing expansion. A beat supports the rally. A miss could trigger pullback. Also watch for any Fed official comments about rate cut timing given strong tech earnings, but mixed economic data. Friday's jobs report determines March's direction. Strong jobs delay rate cuts, but confirm economic health. Weak jobs accelerate cut expectations, but raise recession fears. The technical setup is bullish. 7,000 held as support. Buyers are aggressive, and momentum favors continuation. But volatility could spike on data surprises. Stay disciplined around that 7,000 level. That's it for today's Wallet Brief. Subscribe for daily updates on what's moving markets and your money.